Good morning, everybody. Welcome back to the Schwab YouTube coaching channel for our next topic, Trader Talk in today's market. I'm your host, Kevin Horner. It's a beautiful morning here in Denver, Colorado. And as always on a Wednesday, pleased to be joined by my friend and fellow coach, Mr. Brent Morris. Good morning, Brent. How you doing?
I'm doing good. I'm a little tired. I was up late, Kevin, watching the new Mission Impossible movie with my daughter. So it lasted a little, it's a pretty lengthy movie. Good. If you like the others in the series, you'll like that one, I think. If it's not your type of movie, not your genre, probably wouldn't like it, but I liked it. It was pretty good.
Well, I am in for any Tom Cruise Mission Impossible stuff. I'm happy to see that, and I will be checking that out as soon as I possibly can. Good review, Brent. Thanks. Obviously, a good way to spend an evening, of course. So, well, we've got plenty to cover, needless to say here. We've had a good push in the last couple of days here, moving into some important levels on the major indices, and we're going to look at those and see if we have the potential for a breakout today in the S&P 500 initially. So we're going to look at all of that with you, hit up some sectors, get to some individual stocks in the news as well. Say hi to our friend Barb Armstrong there in the chat. She'll keep you all in line. Not that that's a problem. I see a lot of familiar faces, and you all do a wonderful job of keeping each other in line and keeping the conversation going anyway. So pop in there, say hey to Barb, ask some questions. Brent and I will keep an eye on things and try to get to those as well. Now, let's remind you that our discussion is only informational and educational here. Remember, we do not make recommendations nor endorsements for a particular approach to trading or any strategy to trading here. Beyond that, though, we do cover and discuss technical analysis quite a bit. That's our leading process here when we discuss technicals. Remember, these are merely a piece of the overall puzzle, everybody. We need to be disciplined in our approach. We need to get as many data points as we can to make our decisions. Technicals can be one of those data points, but we discourage you from making decisions exclusively from the technicals. All right, and in terms of our agenda, more of the same here as I kicked us off, everybody. We're talking broad indices. We'll look through some of those sectors that are on the move and see if we can learn anything about the relationship between those dollars into certain sectors, out of other sectors, and of course, some stocks in the news as well. So let's jump right to it. The range we're talking about here, everybody, we were looking at the S&P 500 and talking about, as I zoom in, this little range that we've been in since the gap move in mid-May here, Brent. That was really the move that kind of gave a little breather to the overall bulls in the S&P 500 here. And now we have managed to push to what looks like a new short-term high, Brent, maybe the highest we have been now since late February.
Yes, Kevin. I mean, that is, we had like a little channel there. And are we now going to, and it's too early to tell because the market just opened and we'll see, but can we establish that as a new ledge support level? The bounce that we saw, about, I don't know, a week or two ago, you have highlighted on the chart, that was a key one because that established that held. Will we establish this new level? It's like you're rock climbing and you're establishing a new, and I'm not a rock climber, so I may screw this up, but you put a new carabiner in at a higher level as you're going up. That's kind of as we're climbing, as we seek, that high that you see on the chart there in February, that's an all-time high in the S&P 500. We're not that far away from that on a percentage basis there, Kevin.
We're really not. And first of all, let me just back this up. What an excellent analogy, the rock climbing idea. Raising your stops and such is akin to raising your carabiner to the nearest level beneath you to protect yourself if you do fall. What a great analogy. I used to rock climb, then I had kids, so it's been quite a while since I've been on.
That changes everything, Kevin.
Don't they?
Some people would say it ruins everything, but
I didn't say that.
It changes everything, no doubt.
It changes everything. That's a good way of putting it. But yeah, you're absolutely right. We achieve a certain level, and then we raise those stops or carabiners to a level so that if we fall, we're going to get caught a little bit earlier, we hope. So yeah, maybe today's move is giving us that opportunity for some stop level raises as it relates to the S&P 500. Needless to say here, everyone, it's real early in the morning, so let's not get ahead of ourselves on an open. Let's make sure that candle looks green at the conclusion of the day today, and a close through 59.85 up to 6,000 is entirely within possibility here. And like Brent said, the prior high, the 6147, represents a potential target for a couple of reasons. One, yeah, it's the prior high. So let's put a line at the prior high just for good measure. And then we're going to do the measured move calculation for just the last couple of weeks here, everybody. And if we just did that, like so, and took that line and added it to the breakout spot like this, and it's all going to come together. Boy, Brent, I mean, I don't know, man. They say technical analysis is kind of like voodoo, but sometimes it makes some sense.
That lined up perfectly there for Kev. I mean, I couldn't have like, you can zoom in and it comes up perfect, I think, on that one.
Yeah. So now that doesn't mean that we can't, lose steam midday. Right? We have earnings in the afternoon as well. We'll be hearing for some retailers, and anything is possible. But we have to know these levels so that we know how we want to approach things. Remember, the whole concept is the if-then statement, right? If we move through a certain level on a closing basis, can I be more bullish? And if so, what does that mean to my trade process? Am I going to be adding more trades to the table? Am I going to be pulling trades off the table, etc.? Have that plan, know how you want to attack it. And of course, Brent, last note, even if we push to 6150, there's nothing to suggest we have to break through there. As much as we want to move to new highs, we have to at least be prepared for a move to that area that could then get rejected. It has to be a possibility.
Yes, and so and of course we're swimming in a world of news and unexpected events, and that can ultimately push us above support level, above resistance levels, or below support levels. If we get some really bad news, we could easily drop down into this slot we've been in the last few weeks, and ultimately, what will push us above the the all-time highs? Well, I don't know. We'll have to wait and see on that. Well, if there's not news, it's probably more likely to be kind of a stair-step type process as we go forward.
That's a really good point, Brent, because what if we do get rejected here today, maybe an intraday rejection? The possibility exists that we don't even see the bottom of the range, but rather the 20-day moving average, and we get the opportunity for a higher low. There's always steps that can be taken in ways that this market's going to act. It's in our job, basically, to figure out where we want to start mounting our stand in terms of adding to the market, pulling from the market, reducing our position sizes, adding our position sizes, etc. So, just have some of those ideas, right, where you would like to act and things that you're going to believe in and use as your impetus to put those trades on or take those trades off. So,
just to add real quickly to what you just said here, Kevin, because it's such a good point. Support levels aren't guarantees of that the stock's not going to go below it, but they're a means of controlling your risk and your position sizing, of a place to key off of stop levels and entry levels and things like that. That's the value of support levels. They're not a guarantee of any level that the stock's going to stay above.
Yeah, it's the truth. We talk about that too, don't we? The idea that, technical analysis, as much as we want it to be, it's not really telling us the future, but it is telling us how we can manage our positions based on price action for the future. It should give us the levels that having worked through. Now we know where we can start to be decisioning weakness, right? Where I see now weakness coming in, now I can be a seller. That's really what it should be doing for us more than anything else. So, okay, let's move on to the NASDAQ here, Brent. Man, the more I look at this, the more impressed I am by the V, the deep, deep V we continue to see in the NASDAQ 100 here, Brent. This has just been an incredible push.
It has, and it's a weird one because it's not like COVID, where we had this like kind of discernible trauma to the market, and it clear kind of climbing back out of that. This has been just kind of a lot of weird, uncertain news, and it not a clear resolution. I mean, in terms of the stuff that seemed to spook the market, I'm not sure we're completely past all that at this point either. But I can't argue with the chart. It doesn't work to argue with the chart. It's been a really strong deep V and a really strong recovery. And I don't know where the future is going to hold, but at the current rate we're going, we're not that far away from an all-time high on the NASDAQ.
It's true. And we look at the orange line there, everybody. That's the 20-day moving average, just shy of 21,120. The reason I bring that up, because when you look at the trend analysis, if that's your ditch out spot, I just bring it up because it's 500 points away. And you might not be cozy sticking with 500 points of downside in the NDX here. And if you're wondering, I mean, again, there's nothing on the chart right now that suggests that we need to revisit the 20-day imminently, but it's worth keeping an eye on, because a pullback to the 20 might very well be a spot where bullish traders are looking to join the trend here. I mean, the trend that's been working since April 7, I want to say. Nope, not April 7, April 23rd, when we recaptured the 20-day here. So, we're getting to be right in that 6-week window of having maintained an important short-term moving average. And again, we're at new highs in the short run here. Basically, again, the highest we have been since late February. So I'm sure a lot of bulls looking into this 22,222 zone yet again, in the hopes that we can get there short order. Not too far off all of a sudden, is it?
No, it's not. NASDAQ's up, S&P 500's up. Beth brings up a good point in the chat. She says, not a great, so we had an ADP report this morning, and it was kind of really not good at all. It was woefully short. But the market is kind of like shrugging that off. So Beth said, well, is this kind of one of those situations where bad news is good news? Well, the situation Beth's referring to is, does a bad report free up, kind of the Fed to cut rates? Or are they going to feel more comfortable cutting rates in that case? That would be kind of the scenario of the bad news is good news. I don't know if that's it. I don't know if the market's just, I wish I just had the definitive answer for you, Beth. But or if the market's just like, the momentum's up and that report isn't really going to meaningfully change the whole thing. Because, you have this slew of reports. There's so many different data points. This is one data point. Maybe that's it too. I don't know the answer to that, Beth. Good question, though.
It is a good question. It's way unclear. Obviously, Brent, if you knew, we'd be, subscribing to your newsletter, and we wouldn't get you here on Wednesdays. So,
yeah.
But there's been a minor change. I looked at the Fed tool. The Fed tool suggests a steady rate level for obviously in June. No expectations of a cut, even with this adjustment. Looking at the July date, July 30. On the overnight basis with this ADP, it's shifted a little bit from 75.6 hold steady to 71.8% hold steady. So there's been a small shift to the idea that we could get a cut in July out of that, maybe based on that ADP number. Now, if we look out to September, that is more in line with the expectations of 56%. Positioning for a 25% cut between now and the September 17 date on things here. So yeah, that miss was pretty notable. I think the level was 111,000 expectation, and it came out at 37,000. Yeah. That's a pretty substantial miss. So it is early. Again, let's not overdo the reaction to it, but the possibility maybe exists that Beth's on the right path there. Just the idea that, bad news might be good news here. We'll see. And we'll see how that plays over the next, say, 24 to 48 hours here. But I did notice we have a survey there in the chat. Everybody, Barb has reposted that for us. Please take a minute and offer us your insights if you don't mind. We really value those. I know I say it every time, but reminder that those notes that you make, any comments that come directly to Brent and me, and we would love those comments, but also your ideas for things that we can be doing to make sure we're meeting you all the way you want to be met. Let's make sure we're bringing to the table here in Trader Talk what it is you're looking for. So your feedback would be greatly appreciated. Okay, Brent, here's the Russell. Interesting little setup I've drawn in here. And boy, are we at the potential of a neckline all of a sudden.
Yeah, yes, we are. We are right there. Haven't broken out yet. Kind of an ascending triangle, really, in a sense. Mm-hmm. Also the inverse head and shoulders, as you alluded to. And so any way you slice it, it's kind of at a key point, and we're probably not going to know today definitively if we have a a strong break there. We have that downtrend you just drew as well. So and we are above the downtrend, but I think kind of going back to sometimes it's going to take a couple days, few days to really establish a new level. But that is a key level, because if we do break through that using the the inverted head and shoulders or the ascending triangle, either way you look at that, if we do break above that, that's a pretty bullish sign on the chart.
Yeah,
And
it sure would be.
One other thing, consider the rut, how different it is from the last two charts we were looking at, from the S&P 500 and the NASDAQ. I mean, S&P 500 and NASDAQ, we're both kind of flirting. We're not quite there, but with all-time highs. We're not even close to all-time highs with the small caps here.
No, we are not. Couple of thoughts as it relates, though, to the Russell here. I like what you said. We moved into that range. We dabbled at the range for a week before getting thrown back to make a higher low around the 20-day. If we just looked at really the lows in here, it's kind of right in here, right? I mean, we had the one blow-off day that we rallied from. But if we took this level, this is, let's call it 2040, up to the 2110, that's 70 points. And if we added that to a potential breakout at 2110, that gives us 2180, and 2177 approximately is the 200-day moving average. So that gives you a target zone, everybody. If we break, again, if we break, we don't know that that's going to occur, but I do find it notable, Brent, because if Russell is going to break out, and some would say we may have one day above the downtrend line today, day two above a downtrend line, could be confirmation for some aggressive traders. But Brent, could this be the leading conversation around the potential for rate cuts? Because what of these major indices is apt to perform best if we start getting rate cuts?
Well, if we start getting rate cuts, it tends to help those companies that tend to be more debt sensitive, and that is small cap companies. They have more debt. They are more, and so the financing which they need is a bigger issue. They tend to be more economically sensitive. So if we do have economic slowdown, these are the weakest companies out there right now. Just as a whole, this is kind of a generalization, but the Russell would probably react the most.
I think you're right there. So let's see. Maybe there's a little bit of a leading trade here out of the Russell, but once more, closing values carrying a lot more weight. So that's something we're going to keep a close eye on. We're getting some good movement out of the semis of late. There's been some positivity, generally speaking, through the space, which has been a bit of a struggle. And yet, Brent, I feel like if I draw a downtrend line to capture these peaks from this peak, we're probably right at it yet again, aren't we? We're pretty close to it.
Yeah. And so that's a potential area that we'll need to deal with if we can get above there. But I mean, that's a pretty substantial gain that we've had since the beginning of April. I mean, it hasn't been that long. We're only beginning of June, so we're two months here right now. That's a 40, almost 50% gain in 2 months' time. So there you go. And you can see that in semiconductors and other, we'll say adjacent type industries there on that are just going crazy.
Yeah. And it's kind of fun, mainly because, when things were going crazy for the semis previously, we've had some exceptional push, and it's been some bullish uptrends to work with. We'll see if that holds. If you're a new trader, a lot of new traders are going to look at today's move as a potential gap and go setup, given the nature of what's gone on over the last 2 to 3 weeks here, getting back above the 200-day, holding the 200-day, consolidating in that range for the last couple of weeks. That range, well, let's just go ahead and do the range, and let's see if we can target somewhere near us up above on a potential for a breakout, and what it might give traders the opportunity to consider. Could be up there in the neighborhood of about 5280 to 5300, and that would be coincident with previous horizontal, wouldn't it?
Yeah, that is this is an index, so we can't get a volume profile on it, but what you would see here on this is you'd see a huge volume area between about 5,000 and about 5,400. That's going to be the area which I think from a traditional technical standpoint, you'd say that'd be an area that's maybe a little bit more comfortable for this to stay in, and a little bit harder to break out of, probably above that 5,400 level.
Yeah, I think 5,400 would be a significant development if achieved, right?
Yeah.
Not to suggest we can't break through there, but I would say that any move to that level might take more than a couple of days to push through. That's absolutely a scenario where you're looking and saying, we've run to resistance. We expect a pause. That's kind of a common approach to moving into areas of resistance. And you saw it just back here, Brent, when we were talking about this level. We moved into it a few different times, and rarely does it happen that you move to an important level of resistance and immediately pop through.
Yes.
Commonly, you need some time at those levels before we can really achieve those new ranges, if you will.
And let me go one step further.
Sure.
Not only do you go to a level and pause, a lot of times you'll go to the level and actually have a pullback, some sort of a minor pullback, and you can call that a flag, you can call it whatever you want. And this is actually something I'm planning on addressing in my managing an options portfolio class today, is
Great.
Just because you have a little bit of a pullback doesn't mean, the whole thing is, just because you go up to a certain level doesn't mean it's going to stay up at that level. A lot of times you have that pullback, and for the trader, that can be important. Number one, it may mean, hey, look, the pullback, if you go in with kind of the expectation of a pullback, it may mean that just because you get a little pullback, we're not just going to write off the whole trade at that point. We'll see on that. But yeah, the point is, if we break above here and head up to that 5,400 level, yeah, it's probably not going to immediately go above. Probably, I don't know for sure, but it very well may not go above that 5,400 level immediately. Furthermore, it may pull back closer to mid-channel or even further after we do that.
Yeah, it's right. Brent, I don't know about you, but I've always, historically, in my learning process, which is ongoing and never ending, I'm reminded that often we move into these areas of resistance, and as a trader, you feel like, oh, we moved to resistance and we didn't break through. That means we have to reverse. But there's a difference between reverse and pullback. And the biggest is that a pullback commonly gives you higher lows, right? The pullback to a low that is higher than the last pullback's low. And then we bounce off of it. That's what we got back here. And that's the kind of price action that can give the bulls some comfort that maintaining the new level is just as important as having busted through it immediately. So keep that in mind, everybody. We don't get the price moves we want in our time. We get them in the market's time much more consistently than ours.
And a lot of times it's kind of not, as a trader, I don't mind seeing the pullback as we're establishing higher lows, because if you don't see the pullback and it just keeps going up, you kind of go, wow, this has gone up so much, it's going to come back. I'm less likely to want to get in after a stock has extended itself so far. Whereas if you pull back, get a higher low, higher bounce there, that may be a opportune time to consider, looking at an entry on a trade.
Yeah. And largely, Brent, because if you decide to buy after a big move like this one, followed by a hold, or maybe this test at the 20-day, you're entering with a better risk reward scenario, right? You're able to say, oh, if I bought it on this green candle day and I'll sell it if it traded back below the red candle intraday low there, my risk reward favors the bullish side of things here. My risk is relatively light compared to my opportunity if it does in fact break out. So as always, there's a way to massage every trade if you're looking to make it, everyone. It doesn't have to be full position. As you all know, I speak to so frequently the idea of piecing in on little of these moves. If you can't stomach being as aggressive as you might want to be based on 1 day or 2 day candles, take a 10% trade and see how it works. Sometimes it happens. So Okay, Brent, let's look at what's going on sector-wise here. Let's just do a little review. We are in leadership today with healthcare, which has been under quite a struggle. Now, there's some changing going on in the chart, Brent, and it might very well be too early, but there does appear to be some semblance of improvement here, no?
Yeah, healthcare is the worst performing sector over the last month, okay, of all the sectors. Now, you're right. It looks like maybe it's pulling out of our channel a little bit. We're right near our resistance. We're above our 20-day now. And so that's all a good sign. But it's hard to argue with the trend that we've had, and not just the last month, but really since kind of March. Well, I mean, everything kind of fell in March, I think, but this just hasn't recovered like most of them here. And so, we'll have to see. We did break above that 20. We'll see if we can hold that 20.
Yeah, it's one day today. Maybe traders will target that 50-day. Now, we haven't seen the 50-day since we fell through. When we tested it here back in late March, we fell through, quick test, rejection. So 50-day, I think some traders would tell you, Brent, a move to the 50-day is a short-term sell opportunity if you've been a buyer in the recent lows, based on a bullish divergence down here with price action, perhaps. But, again, not to suggest that it can only go to the 50-day. There's a pretty significant ledge, though, as you can see, everybody, that 50-day happens to reach out to, right to that last low as well. Yeah. So what once was support could now be resistance. And yeah, that could very well still be the case. So potentially an improving chart, but still what appears to be quite a ways to go. But some leadership there out of healthcare today. Now, communications has been moving. We saw some real positive moves out of Meta recently, and this one has taken out a pretty important level. And again, Brent, not just taking it out, but taking its time as it has maintained that level, allowing the 20-day moving average to get caught up now. So it seems to be a pretty solid grouping of support between the 20-day and that horizontal zone.
I think a lot of traders like it when a stock maintains some contact, so to speak, with its moving average. Yes, it's nice when it pulls away in a sense if you're already in the trade, but you kind of often get the sense when it pulls way away from that moving average that it's going to kind of revert back, so to speak. In this case, we've been kind of maintaining that 20-day, taking its time relative to some of the others that we've seen. And nice little V, like we've talked about, got a support. And you can see the strength of that trend in our RSI. We're up getting close to that 70 level almost. We're not quite there, but that's okay. That's great. That just shows that we've had a strong trend. And that is not, a lot of times I mention RSI going higher or going up to 70. When you're in a trend, that's not a bad thing. That's a good thing. And that's just showing the strength of the trend right now.
Yeah, confirmation, basically, right? And that ledge I just drew in at around 355, 356 looks like an important one on this space for communications. Can get through there. That would certainly be, another range opportunity, maybe another 12 points there. 143 to 155. 155 plus 12 gives you 167, and that gives you this range in this ballpark up here. So it could be just more stair steps. Certainly, as we always know, you got to understand the leaders in a space like this. We know that the majority component makeup in communications is basically Meta and Netflix and Alphabet, right? I mean, pretty much. So, leadership is going to come from the big three, was what I would say there. Okay, Brent, let's peek in on energy. It's been a bit of a struggle, been a bit of a dog. We've had some, short-term deflationary approach as it relates to oil. Oil continues to stay languished, thankfully, to a certain extent, thankfully, of course. But we know that impacts that's due to impacts of the overall health of the economy. And when I'm looking at energy, the rally into the 50-day seems kind of notable here. Still a group that needs some improvement, doesn't it?
Yeah, and I don't know where that improvement is going to come from. I mean, I guess just overall economic strength, perceptions of economic strength would help boost the price of oil from the supply side, OPEC's not really helping the situation a lot right now. Helping, I mean, as a consumer, I love oil, oil being lower, both at the gas pump and it is one of the things that is helping to keep inflation down is energy prices. And so that's good. But in terms of oil bulls, yeah, I mean, the demand side's not great and supply side right now. Supply side's not great and demand side, a lot of that's based on forecasts, and there's just a lot of uncertainty in the forecast. If we get more forecast strength, you'd probably see oil go up more.
There's a look at the oil chart, Brent, the futures. A little bit of a double bottom with a bullish divergence down there at the double bottom at around 55. And sure, we've pushed off, but we've not fixed anything to this trend. I could probably move this line down to a more appropriate resistance, which basically is the level we've run to here. Now, we are in the process, maybe day 2 above the 50-day moving average there. So potentially some confirmation for some traders in oil, but it's a limited opportunity, some would say, Brent, because we are clearly below the long run trend line here at the 200-day, way up there at around 69. But there's certainly another band of resistance up there about 67 as well that bears watching. We did have a question on, I mentioned the component breakdown as it relates to the position in communications.
Yes.
And it is pretty substantial. It looks like it's about 16.5% in Meta, another 8.5% in Google, Alphabet Class A, but they're separating Class A and Class B Alphabet. So there's about 15% in Alphabet combined, plus another 7% in Netflix. That makes up about a 38% component for communications tied directly to those big three. So just wanted to make sure I got to your question there, Carol. Hopefully that was helpful. Okay, Brent, I'm going to throw it to you now. I've got a couple off my chest here. Which of these sectors do you think are moving, or anything else of note here, or do you want to move into some stocks in the news?
Here's what I would say. The top sector over the past month, IT. Okay, probably not a shocker here on that. But, and you can kind of get a sense for that when we look at the, the NASDAQ chart or whatever. But just, you can see how big, and like, is there any sign of this letting up at this point? That's certainly something. And yeah, I mean, we kind of flag breakout, and I don't know what to say about it, but this is another example of looking at the RSI. We got in that kind of overbought area, so to speak, and yeah, we did pull back a little bit, but that's not a horrible thing. When the stock is trending up, high RSIs is bad. When a stock is kind of trending, or index is kind of, trendless, when it's kind of going sideways, that's when it's probably a little bit more concerning, when you get in kind of the overbought or oversold zones. But when we're in a trend, that's just showing the strength that we've had. And I don't see, today is not the strongest day on this. It's up a little bit, but we have strength. We're above that 20 still, and that 20 is potential support as well.
Yes, it is. Yes, it is. All right.
One other thing I would just mention is, in terms of, again, kind of going back to the last month, the sectors that are strongest, IT, consumer discretionary, industrials, communications, those are your more cyclical sectors. The worst performing sectors over the past month, healthcare, real estate, staples, utilities, those are your defensive sectors. So this is just kind of a classic rotation into strength in the market of the money goes somewhere, and the money and sometimes you get these kind of anomalies where one sector does well, but if you kind of just like want to make a generalization, this market right now is fitting the prototype for that, of what is strong when the market's going up and what is weak, the weaker sectors when the market is going up.
Yeah, it's a good reminder of how trend traders approach it, right? Try not to stay stuck in a group that's suddenly not working. go with the group that is working, right? I've kind of likened it to being a chameleon as a trader. If you're a trader, that is, you do need to be a little bit like a chameleon. You need to shift with the market conditions, find where the opportunities reside. Hopefully you're not changing your approach to trading, meaning if you like to buy bullish flag breakouts, you're going to find them, but they're probably being located in other areas compared to maybe where you were looking previously. So, just kind of make sure you're working through your process. I think that's a big part of it, obviously. Okay, let's see what else we got in here on the individual equity basis. I think we should probably check out how we're reacting to CrowdStrike. CrowdStrike had earnings after the bell yesterday. Looks like they were poorly received. However, Brent, sometimes poorly received earnings are opportunities to join into a potential trend. And some traders would tell you that's exactly what you're getting here with the pullback in CrowdStrike.
Yeah. So, I mean, we weighed on that. CrowdStrike, we had earnings, and I didn't actually see the numbers on the earnings there, but we can see where we're at here on this right now. And we pulled back to kind of this support level. And so for, I don't know whether that's going to hold or not. So this isn't any recommendation here or anything, but it is an opportunity if you were worried that we were too far extended on this. So what some traders do sometimes in this is when you get the pullback and you're going, well, maybe this is my opportunity to get in, but I'm worried it's going to continue to fall. You look for a sign of support here on this. And we may be a little bit premature, early to say just because we're at what we kind of perceive to be a support level that it's going to bounce. Mm-hmm. We can wait. I mean, intraday, we tested some lowers. You just highlighted that. And it would be a positive thing, even though CrowdStrike is, getting hit pretty hard today. If we could end up with a kind of a hammer candle or something here, that would be a good sign for a CrowdStrike.
It would, and we got to call out the other details here. Bank of America downgrading CrowdStrike this morning to neutral from outperform. New target at 470 down from 420. Canaccord analysts cutting CrowdStrike to hold from buy. Previous target 475 now at 420. Evercore downgrading CrowdStrike to in line from previously outperform. New target at 440 down from 450. Evercore's comment was that it was their company's Q1 was solidly executed, though not exceptional. Which, basically, great move. And that's probably, when you look at price action, dictates some of this as well. We've had a really strong push, essentially from 300 to 490. So a little bit of profit taking, a little bit of a pullback, not to be unexpected. And as it relates to the pullback today, intraday, obviously traders are going to wait to see that car stop going in reverse, come to a complete stop, and then look to participate. At least that's a bit more comfortable for many traders, of course. So let's see how the action goes today. Maybe we hold the 20 today, maybe we don't, but that could be quite instructive for us over the coming couple of days here on CrowdStrike. I did see some questions on CEG, Constellation Energy. Let's take a peek here. They had a report yesterday, Brent, that was all tied, if I'm not mistaken, to their opportunity for developing even more power as it relates to AI. But they did take a downgrade from Constellation to buy to neutral from buy. New target at 318, which is actually up from 232. So they cite the valuation on CEG as the reason for their downgrade. But nonetheless, Brent, this has been an incredible move for this stock. We could talk about the percentage here. If you were a let's say nimble trader and you got yourself out at the peak yesterday and you were a buyer back there in April, you may have done pretty well. That's 111% move, Brent. Pretty incredible.
Yeah, compare this to, energy as a whole. We were just talking about energy and oil and whatnot, where it was struggling. Not Constellation Energy here. They have had quite a run, and so those bigger pullbacks. This in some sense, this is similar to the CrowdStrike chart in that we have the pullback, and so what traders were doing and will consider doing. And keep in mind, I'm talking trading. I'm not talking long-term investing. So when we talk, valuation, when you start talking as an investor, then you have more, it's more likely to have valuation concerns. But with shorter term trading, what we're talking about, we're going to focus more on the fundamentals here on this. So as the trader, what they want to see is a sign that we're bouncing from here. And as of right now, don't have that. But the trend is still up. We've just had a big, very substantial pullback on this, but that trend is up right now.
Yeah, it happens. Another reminder as to why not everybody is comfy trading in and around earnings. And another reason why sometimes you get big spikes like this and traders are apt to pat themselves on the back for portions of it. You did get that sell signal based on the action today and yesterday, that sell signal being the RSI back below 70 after having been above 70. So what you're looking for to this extent, obviously, maybe a pullback to the 20-day and another bounce that would give you some indication of support being held here. And obviously you'd need the RSI to start fish hooking back to the upside at that point. So we'll see how that plays out. There's been a little bit of volatility all of a sudden here in the last couple of moments, Brent. And I thought we might just peek in here on the SPX. All right, so did that just tag my white line to the level? Oh my goodness, that's pretty intriguing. So that was just the breakout level, everybody, on the daily chart, Brent. And we took a little bit of weakness to come back and test it. And now you got the 5-minute bar already above the high. If that's the low candle for the day, maybe that's an opportunity for very short-term traders. I don't know. I didn't see anything on the headlines in the last 5 to 10 minutes that led to this, little bit of selling in here, Brent, but it's certainly a reminder of what could happen with a speedy market, huh?
Yeah, it is. And, we are looking pretty short term here. So it's, it doesn't, I don't know where the market could actually, I don't know where we're going to close the day here, but I would say, given, kind of bringing us back to what we talked about earlier in the show, was given the weaker ADP report, actually, market holding even or better actually may not be maybe kind of almost a bullish sign here for the market in the light of that. Now, coming up later this week, we did have I'm not sure. We did have the ISM report, I think, that came out here, and that could have possibly affected it. I think that was this morning.
I think that came at 10 Eastern, and that's when this little pullback hit.
Okay, that certainly could have been the case. And then just a heads up, on Friday we have our non-farm payrolls report. That's the monthly report. That certainly it can be a market mover too.
Yes, it can.
More so than ADP typically.
Sure. Last one to look at. I just wanted to peek in on HIMSS here real quickly, Brent. HIMSS had a rough day yesterday. They had this excellent open that then got sold down aggressively. Stock moved up to 67 in the aftermarket and managed to finish at 54.73 for an incredible reversal, similar to what we saw in CEG there yesterday. I always like to look at these because it just never ceases to amaze me how these moves can be sustained, and then sometimes they just give them all back immediately. Now, it did come back to a pretty intriguing, can get a bounce. Today, they announced that they're going to cut 68 employees, only about 4% of their workforce, to adjust to the U.S. ban on manufacturing mass copies of Wegovy and NIAS, according to Reuters. So these changes are focused on sharpening how they choose to execute without affecting their priorities on the specialities they're committed to, according to the company's spokesman regarding their layoffs. So just a little bit of a heads up there, and another review of a stock, Brent, that had good initial open on earnings, and it just didn't stick. So not everything's going to work every time. That much we know when we get to technicals. That's for sure.
Yeah.
Brent, anything else you want to leave us with here on this Wednesday as we
just a little update. That ISM Services PMI was a miss. It came in at 49.9. On those ISM reports, 50 is kind of the key level. Now, it's not huge, going 49.9. It's not way below that, but the forecast was about 52, 49.9. So, who knows how much that affected things.
Well, it seemed to have a little bit of impact on the 5-minute bars. And you know what? news news like that stops being news 5 minutes later. Clearly not necessarily a substantial bit of news. Now, that doesn't mean that that's going to be the intraday low. We'll see if that plays. Obviously, lots more to watch on an intraday price action to help you all out. Remember, everybody, we got that survey. Thank you, Barb, for reposting it, everyone. If you're not already doing so, follow the three of us on X, Barb Armstrong, CS, Brent Moore, CS, and Kevin Horner, CS. Hit that survey with your ideas and insights for things that we can be doing a little differently for you here on Trader Talk. We would greatly appreciate that. But hope you all have a great Wednesday. Keep it tuned right here. You'll have Brent back a little later today talking more and giving you more details and insights. So with that, have a fantastic Wednesday, everybody. We look forward to seeing you all again real soon.